Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. It's a strong start to the expiry week. The Nifty trades above the 10,600 mark. IT leads the gains. Most sectoral indices advance. TCS makes it to the $100 billion club, becoming the first Indian tech company to achieve that milestone. Real estate stocks are among the top sectoral gainers. Stocks like Oberoi Realty and Godrej Properties gain over 5% each in trade. And Walmart is all set to pick up majority stake in Flipkart at a valuation of at least $12 billion. That is a Bloomberg exclusive.
Well, that's the sum and substance of the key newsmakers. Let's pull up the markets, and we're doing rather well for ourselves. This is despite Europe not doing all that well. That's about 0.25% or 0.5% down most of the European indices. We are up. Look at that, 0.5% for DAX, almost 1/3% for CAC. So the world markets aren't looking, I mean, they're not looking a sad place, but they aren't looking particularly happy. We are doing very well for ourselves. Presume courtesy IT. Nifty IT is done well, and the heat map will then show you the kind of gains that some of these individual names have had. So let's pull up one Nifty IT, which is 2.25% higher, and now pull up the heat map and just show you what is doing well. Yes, TCS would be right up there amongst the top rows of companies, but HCL Tech another 4%, Tech Mahindra about 2.5%, Infosys about 2.25%, so no surprise there. IndusInd Bank has had a big move today, 4% higher, so good going there. So is Mahindra and Mahindra, about 2.5% to 3%. So good going by and large for select pockets in the large cap space, which includes technology and select banking names. Yes Bank too, about a couple of percentage points higher, and not enough losers. I mean, save for HDFC Bank and ICICI Bank, which are also down less than 1%, there are not enough heavyweights which are down, which is probably helping the index do what it is doing. What's trending today? I mean, we've spoken about the heat map having a fair bit of green on the screen as opposed to red. But what's trending today, and what are the key trends of the trade today? I think both large caps and mid caps look at similar trends shaping up. So you don't have too many real estate names in the large cap space, but the principal one, Oberoi Realty, up about 6% in trade. There is also Godrej Properties, which is up about 4%. Max Financial continues to rise and shine. Second day of gains. Remember, in Friday's session, it had a big surge towards the second half of trade. And Jubilant Life also continues to rise and shine. On the flip side, I mean, the list of losers, it's okay. Select banks have come off a little bit. Vakrangi continues to fall, but aside of that, not too much. Flip it to the small cap space, and you'll see a clutch of IT names out there as well. In fact, Minda Corp being a big winner, 16% higher. But look at the others. NIT is up, Tata Elxsi is up. So IT is having a fabulous day. But yeah, clearly Minda Corp at 16% has only gained from strength to strength. And on the flip side, Reliance Defense, Rain, GNFC, no specific news really for some of these, but they are struggling a bit in trade. Navneet, what about the more liquid universe?
Well, it's all about the IT pack, Neeraj. We had a weak opening, and we built on to those gains. In fact, Nifty's conquered the 10,600 mark in today's trading session. Let's pull up the futures and see where they are trading, considering this is the expiry week. So rollovers will be in focus, and also how the premium and the discount picture shapes up. Pull up the Nifty futures. 10,621 is where the spot trades, but the April futures have actually been trading at a discount of almost 8 points, 3% higher. If you could just also pull up the rollover plate, that's going to help us to analyze as to what sort of positions are being rolled over towards the May series. So as of now, rollover for Nifty only stands at about 15%. For Bank Nifty, which has been underperforming Nifty in the last few trading sessions, that's also off the opening lows right now, and that's trading above the mark of 25,000. So a positive sign. In fact, if you look at the April series, Bank Nifty has gained over 700 points. Nifty has gained about over 500 points. The futures, however, of Bank Nifty too have been trading at a discount of nearly 35 points. What's happening on the option side then? Well, the picture has clearly reversed if you compare it to the opening session till 10:30. We were seeing more action coming in on the call side, but right now there is a lot of put writing that has come in for strikes like 10,500 as well as the 10,600 strike. In fact, for both these put strikes, we've seen open interest addition to the tune of almost over 16 lakh shares for 600 strike, and for the 10,500 around around 11 lakh shares have been added. On the call side, 600 and 700 strikes are pretty much active in trade. And remember, maximum OI concentration is between the 10,700 call and the 10,500 put strike. Important to see if we can sustain the level where we are trading today, because a lot of technical analysts were stating that 10,630 will be the key resistance mark for Nifty. If we can close above that, probably we could be in for further gains. In terms of stock futures, it's all about the IT pack, and Neeraj has already spoken about these counters. I'm just going to take you through what's happening on the future side. Tata Elxsi, a counter which is trading around its lifetime high levels, 8% higher for this one, 1232. Fresh long positions have been seen on the future side for this counter. In fact, on the cash side too, we've seen volumes being on the higher side. So for April futures, open interest is up nearly 10%. The other one is NIT Techs, and both of them are the top F&O gainers also for the day. It's gone up on high volumes on the cash side. This one too is trading around its all-time high levels. 1,063 is the mark where NIT Tech currently trades. And if you look at the futures, for April futures, remember this is the expiry week, and look at the build-up there, almost up 50%, which is telling you even at higher levels, traders are betting and taking long positions on this counter.
Well, so mid-cap IT or IT today as well. We spoke in the morning about the possibility of the extension of the gains. Consumption names still doing okay, and real estate finding a way as well. Let's now get you a market voice. Vaibhav Sanghavi, he's co-CEO at Avendus Capital, joins us right now on the show. Vaibhav, good having you. Thanks so much for joining in. We're doing much better than what the world markets seem to be doing. I would presume courtesy select private banks, but more importantly, information technology. The question mark is, what have you made of these first 10, 15 or 23 days of the month of April? The kind of noises emanating post quarterly numbers from corporate India, as well as the fillip that some good news is giving to valuations for companies. Nobody seemed to be minding the northwards of 18 times 1 year forward earnings for Nifty IT.
No, of course. I mean, if you see on an IT space, in the last 4 years, they have been massively underperforming the whole market movement. What we have essentially this time around seen is basically one, the bottoming of the whole business. Two, which is equally important, is basically that the currency also starting to getting depreciated. And three, that the global growth is getting pretty much in place, led by US. So, Gartner spending forecast has been also positive again for the industry. So what we are all overall basis seeing in the environment is basically where demand is picking up, bottoming up of the business, long-term valuations looking pretty okay in terms of the average valuations. And third and last but not the least is basically massive under ownership among the funds as well. So this is a space which we have been consistently saying that it's going to perform. And that is what we are, looking at in the current context of things.
Vaibhav, I'm just going to take that question forward. So you're saying that you're comfortable around the current valuations which these IT companies have been quoting. So do you foresee more legs to this rally that we've seen IT companies so far this year have been outperforming?
Yes, you may see some amount of consolidation around these levels, but on an overall longer term perspective, including if you look at 1.5 to 2 years to 3 years, I do believe that IT has still a long way to go going forward. All the industry growth forecast has been in the range of about 6 to 8% or 9% growth. This is the first time after a long period of time when we are likely to see early double-digit revenue growth, with a tailwind in the currency as well. So which means that the margin are also going to be intact going forward. So you will see, consistent earnings upgrades or surprises, as against your analyst forecasts. So longer term investing does make sense even at these levels. I have no problem on that.
Okay, longer term investing does make sense, even around the current levels is the view coming in from Vaibhav. The other pack, Vaibhav, which has been in focus is the banking pack, and I want to specifically talk about the private banking space. We had the numbers of HDFC Bank coming about on Saturday. The numbers were pretty much in line, but today is the day when we've also seen something like IndusInd Bank inching to its 52-week high mark. IndusInd Bank is in fact the top gainer on Nifty. What's the view around the private banking space? Because you also have something like ICICI Bank, which continues to reel under pressure. On the other side, performance from HDFC, IndusInd, Kotak has been good.
So if you see very clear trend on the banking space, and I would put three buckets primarily. Is one, private banks with retail focus, private banks with wholesale focus, and other than private banks, which is public sector banks. In terms of the private banks, we have been consistent in saying that we have always focused on private banks with retail focus, wherein there is one, that they have the adequate balance sheet strength to lend going forward. At the same time, if you see the loan growth numbers on the retail side, those guys who are focusing on that segment is something we are extremely keen on and positive on. In terms of the corporate banks, we all know what are the problems around those kind of banks. So we will continue to be bullish on that space. Having said that, you will see on a shorter term basis some amount of consolidation, but longer term opportunity, we are extremely positive on private banks with retail focus.
Okay. Vaibhav, just wondering, almost everybody seems to be believing that the two pet projects for the next 12 months, which will find increased flows from the government, and that's the bank that you should bank on, simply because you don't know how quickly the private sector capex will turn around. But the two pet projects would be the road construction space, if not already, and affordable housing and all forms of real estate. Now, my question to you only is that while real estate stocks, you can still argue that they've had a rally, but nothing too meaningful in the last 6 months. I think in the last 12 months, if there is one space that has created some serious wealth, selectively road construction companies would form a part of that list. Is it too late to go out and own a road construction, or based on the commentary from NHAI and a couple of others, you believe that investors might still find opportunities and multi-year opportunities in this space? Is that a possibility?
Sure, definitely. I mean, infrastructure as an opportunity is pretty huge. Having said that, it is completely different when you translate to individual companies, the amount of order inflow they take in, and at the same time, what is the balance sheet strength as well. While the opportunity will sound pretty huge and very appealing opportunity, I'm not sure how much of that will get translated into the performance of the companies going forward. So we are not completely on a blanket basis bullish on the infrastructure companies. As you rightly mentioned, in terms of a couple of areas like road construction is one of those areas where you might see some amount of momentum continue going forward. But we are more focused on on the balance sheet strength of this space, because that is the only worry which we have in the light that the interest rates are on the upswing, and there is a possibility that the finance cost may increase, leading to some amount of dent on the profitability as well.
Okay. Vaibhav, before we let you go, I want your view on the consumption theme, considering this is the year when majority of the market participants are of the view that markets will remain volatile. You'll have a lot of state elections, and also there are some inflationary pressures on the macro front itself. Keeping all that in mind, maybe the bets are now shifting to a defensive space like the consumption story. How should one play that?
Consumption, I think India is a fantastic country with huge demographic dividend for the consumption theme to consistently play. Now, in terms of consumption also, we would again diversify into both. One is staples and the other is discretionary. Usually you will find that in an inflationary environment, the staples will have some amount of tailwinds because of the pricing power they get on the products. And that is why we have seen the kind of valuations which they are trading currently. At the same time, looking at what the amount of money is being flown into rural economy, we still think that there is space in consumer discretionary led by autos, which may do fairly well going forward. So on an overall consumption basket, we are pretty positive, including staples and discretionary. The only thing in staples is basically the valuations optically look pretty stretched. I would be far more comfortable if there is some amount of correction and gets a better entry point on these staples.
Vaibhav, one final question from my end. I know we briefly touched upon infra and real estate. The question that I have is a couple of companies which embarked upon this model of not putting in or not buying land and therefore not blocking capital, but getting into a joint development method wherein the return ratios will be substantially higher, are now saying that they are now looking to deploy the war chest of cash that they would be sitting on because land prices appear attractive. If we just look at the kind of response that Oberoi's interest subvention scheme project got, they were able to sell quite a bit of projects out there as well. So both sides, one, the land bank owners who are launching the good quality projects at good prices, two, models like what Godrej Properties or Kolte Patil have, which is not buying the land up front, but doing the joint development whereby there's not enough deployment of cash for the land bank, is also doing well. If you guys have coverage here and if you guys have investments here or thoughts of investment here, what are you betting on and why?
Clearly on this, if we may look going forward, not that we are looking at this point in time, but if we may look going forward, is basically one, the balance sheet strength, whether the company has the balance sheet strength to take on land parcels. Clearly, we would not want to have some companies who do an excessive leverage on their balance sheet and goes and buys land, further putting at risk the company to the vagaries of your higher interest rates. In those kind of scenarios, we will definitely do a JV stuff. We'll prefer a JV stuff, like the ones you've mentioned. So, all in all, I think what one needs to understand is, in an environment when you are on the higher or in the scale of rising interest rates, look at the balance sheet strength and accordingly look at the business model which will make more sense. Having said that, I mean, land banks always will give you the maximum because you are getting a markup on the land value as well, but that would definitely need some amount of balance sheet strength, surely.
Okay, Vaibhav, we'll leave it at that note. Thanks a lot for joining us today and taking us through your views on the markets. Well, talking about the markets, Nifty's actually come off a bit, still holding above the mark of 10,600, 10,606. Bank Nifty slipped below the mark of 25,000 as we speak. Just want to pull up NIIT Limited, that's the counter which has surged almost 11% in trade. It's also touched its fresh 52-week high in today's session. So good going for NIIT Tech as well, almost 10% higher as we speak. TRF is the other one which is up almost 10%. But let's shift focus and talk about some companies and what may bring in a significant uptick in freight movement. Indian Railways has actually revised its wagon requirement for the current year, which is almost double of the procurement that was seen in the last financial year. Let's discuss this in more details. Joining us now on the show is Mr. Umesh Chaudhary, Vice Chairman and Managing Director at Titagarh Wagons. Hi, sir. Good afternoon, and thanks a lot for joining us. Some of the reports were indicating that the target is now almost 15,000 wagons for this financial year. If you could just confirm that news for us, and also if that happens, it's almost double of last year. Can we see a better performance in FY19 then? Because I was looking at your financials, the company has been making losses in December as well as the previous quarters.
Yeah, absolutely. So I have always maintained that the railways over the last 3-4 years have spent significantly on track renewals, on debottlenecking the congested route, signaling upgradation and so on. So in effect, what they have done is they have created enough capacity and debottlenecked the existing capacity. Now, in order to service that investment and in order to get benefit from that investment, they would need to create or utilize capacity. And for utilizing capacity, they would need much more number of wagons than they have been procuring in the past. We have also have heard from the railways during discussions that the freight targets have been increased quite significantly, and as a result of which wagon procurement targets have gone up. But the other side of the story is the private sector wagon demand. The railways have eased up their policies, whether it's the container train operator or the special freight train operator scheme or the automobile scheme. So there is a very healthy demand from the private sector also coming in. So all in all, our own assumption, our own calculation suggests that the number of wagons that the railways would require directly and indirectly would be far higher than the numbers that have been mentioned in the newspaper report.
Oh, so you're suggesting it could be higher than 15,000 as well?
That's the requirement. So
okay.
I would say that the requirement, according to our calculation, we have not heard from the railways officially as to what their exact plans are going to be. But based on our own internal calculation, we believe that the railways requirement in order to sustain or even get close to the targets that they have publicly announced, they would require much more number of wagons.
Okay, and if you could tell us how much of your order book is actually coming from railway orders like wagons?
For our current order book, there's a mix between the private and the railway wagon orders. The last tender that was finalized earlier this calendar year by the railways was for about 9,500 wagons. Between us and our subsidiary, we got 24-25% market share.
Umesh, good afternoon, Neeraj here.
Hi, Neeraj.
Hi. So, a lot of people had started penciling in higher capacity utilization for rail companies without the knowledge of what's come out in the newspaper today. Can you tell us whether business did improve in the last 6 months, or was it yet another case of a fair bit of promises or fair bit of optimism, but not enough constructive activity on the ground?
So in the last, I would say 4, 5, 6 months, I have always maintained, Neeraj, that the number to look at for the railway companies or the railway-based industry is the order book, not the numbers that are getting reported in the revenue. Because there is always a time lag of at least 1 or 2 quarters between orders getting booked and orders starting or converting into revenue. And the order booking over the last 6 months, I would say more towards the last 3-4 months, have been extremely positive. So in the last quarter, when we announced our results, our Indian order book had gone up to almost 1,100 crores between Titagarh and Simco. And this is almost 3 times of what we had in the previous quarter.
Okay. I'm guessing you're not at the liberty to speak about the order book at the end of the year?
You're absolutely
okay,
right.
Fair call. So I won't push you for that. No, completely understand. But Umesh, then the question mark only is that if that momentum is anyways looking like being strong, and I don't know if you can extrapolate that to FY19, and if this number, I agree, this is not official confirmation from the railways, but assuming there is an iota of truth in the report that the newspaper has reported, and the procurement does move up, does that become a bit of a game-changing event, or do you think that's just about par for the course for a company like you, who is one of the leading companies in this space?
So it is no doubt a game-changing event. It is not something that comes in as a surprise to us, because we've always been expecting. We've been expecting this to come maybe 2 years ago, but it's coming in now, and I would say rightly so, because the railways focused on capacity creation, and they diverted all their funds towards that. And going forward, I believe that, one after the other, there are positive triggers that we are hoping for our industry in terms of the dedicated freight corridor getting commissioned, in terms of the core sector continues to grow in a healthy way, so their demands would continue to increase. And the railways have taken up a very aggressive policy to increase their market share. as we've heard from the railways at different levels, that they want to increase their market share from the current 30% to the targeted 50%. So all of this, I would feel that unless there is something spectacularly shocking that happens, we should see for the next 4 or 5 years a good healthy demand for wagons, both from private and public sector, and railways and private sector.
Okay, so Umesh, I mean, one final question from my end, really. The last 5 years, or maybe longer, but I at least have in my mind the history of the last 5 years. The numbers or the revenue delivery, even from one of the leading players like you, has been patchy, has not been really, I mean, has not seen a consistent graph of an uptake, and for all the right reasons. I'm not saying it's a problem with Titagarh. I'm just saying that the order inflow has been like that. Is there a possibility that the next 3 or 4 years we can have, you know, constructive compounded annual growth rate in revenues or order bookings, either of the cases, for the sector at large and maybe for you as a company?
So that's a very interesting question, Neeraj. I think you actually hit the nail on the head. We've been discussing this with the railways, and the railways have now come up, and that's one of the announcements that you would have seen from the railways, that they would be coming out with 3-year tendering. So it's not a switch-on, switch-off industry, and that's what wagon industry has been complaining ever since eternity. That you give the railways places order 1 year, and the next year they just completely dry up the orders. So the railways have said that they would be giving us at least 2-3 years of visibility in terms of the wagon order. And what we do here is that the new tender that will be floated would not be floated for the current year alone, but for the next year or maybe 2 years thereafter as well. So that is very important, that there is visibility, in fact, from railways, not only to us, but also to the private operators in terms of their freight charges, and also that they can plan their capexes accordingly. And this has been one of our biggest sore points, that there has been lack of consistency, and therefore we've not been able to plan our operations in an effective way. Since the railways, we do not know what they're going to do next year.
Umesh, just last question. Your bottom line has also been impacted because of higher interest costs that we've been seeing. What's the update on the debt picture? So
in Titagarh India standalone, we are debt-free. We don't have any debt in standalone entity. The debt actually has increased on account of our overseas subsidiary primarily, and some of the debt is in Simco. Simco is also not very high. The overseas subsidiaries are the companies that have been acquired just about 2.5 years ago, and they would take some time to stabilize. Having said that, our overall acquisition cost for the Italian subsidiary, including the write-offs and the potential write-offs that we disclosed during the last quarter results, of course, they are getting routed through our P&L. But as we take it in management accounting, we are considering it as a part of the takeover cost, is well within our targeted 40 million euros. And therefore, that's not something that is worrying us too much at this stage.
All right, Ramesh, thanks a lot for joining us. All the best for the fourth quarter earnings. That was the management of Titagarh Wagons, sounding quite optimistic. In fact, they do expect the wagon order from railway to be even higher than 15,000, which today DNA reported. Remember, for FY18, it was almost 8,000. But shifting focus from Titagarh Wagons, which is trading with gains of 3 to 4% in trade, there are other stocks which are doing pretty well, and one of them is Oberoi Realty. That's the counter, which is up for the third straight day in a row today, and that also features among the top gainers on the BSE 500 index. Neeraj is with us to decode the buzz behind the stock, and I know, Neeraj, you were asking a lot of questions around the Realty pack. What's happening there?
Well, I don't know if it's got to do with this point that the subvention under the new scheme that Oberoi put out for one of its projects, that they sold quite a bit. Maybe that, maybe something else, but it's certainly revving up the real estate space. And look at, firstly, just surge today, and this is a 2-day surge. It was very flat on Friday, but it's a big sharp move that has happened over the weekend. And I think the the numbers that would have come out to the notice of a few people over the weekend could have led to the stock doing what it is doing today, 7.25% higher. That's a big move that we're seeing in the stock. Now, 2 or 3 things. Don't look at real estate stocks on the basis of price to earning multiple, not the best way to look at them. Most people have a buy or a hold rating on Oberoi Real Estate. It's a quality name, premiumness associated with it. The execution timelines have been spot on. Typically, they have acquired land bank at the right time, and right now they're sitting on a clutch of land bank, which I think certain reports have said hold them steady for the next 3 or 4 years, or maybe even longer. It's trading at a substantial discount to a clutch of peers as well. Some of the more lesser known peers have really rallied quite sharply. Oberoi has rallied, but not so much. All of these factors may be coming into play and leading to the stock doing rather well. There's some bit of buying interest today for sure. I mean, the average volumes in today's session, the white line, substantially higher than what the 20-day average volume is as well. But just take a look at what Oberoi has done versus what some of the other companies have done in the recent past, and you get your answer. I think the stock has not, it's a large market cap compared to the others, has not done as well as some of the others have done. And well, there might be time that market starts valuing the land bank that select companies have, Oberoi being a principal one, and the Mumbai metropolitan region. If there is one company that has got some of the most premium land parcels, probably has to be Oberoi Real Estate. So doing rather well for itself is Oberoi in the session today, both on the price and the volume front. Not to forget that companies like Godrej Properties too have had a good run in trade. Back to you, Sumeet.
Well, that's right. The Nifty Realty Index has also perked up. That's trading with gains of 1.5%. And the reason primarily is the gains that Neeraj just highlighted for stocks like Oberoi as well as Godrej Properties. Well, let's get you some technical views going on the markets. We're still sustaining that mark of 10,600. Let's check with Hemen Kapadia of KRChoksey whether some positions can be taken at current levels, considering this is the expiry week. And also joining us on the show is Richard Jain, technical analyst at Angel Broking. Good afternoon to both of you, gentlemen, and appreciate you joining us today on the show. Hemen, let me come to you first. I remember last week chatting with you, you said, I'm going to stay away from the index. If you have to take any position, go and buy the 10,300 or rather sell the 10,300 put of May series. Are you maintaining that call?
I think so. Frankly speaking, Navneet, the bank Nifty didn't perform. Nifty did. So frankly speaking, it's mixed and it sort of negated the positivity of the Nifty. So I'd say the same thing. I think, okay, now we're at the fag end of the expiry. I think maximum open interest is at around, at least it was till before the market started, around 50 lakhs at 10.5 and 50 lakhs at 10.7. So I think that range remains sacrosanct or at least intact. We have just 3 days now after today. So I'll say maybe it's monotonous, but the same thing. I'd sell the next month 10,300 puts because I mean after 10.5 we have support. We have maximum put open interest 10.4. So 10.3 seems safe enough. I know it's a very defensive strategy, but without the bank Nifty performing, I'm not sure how the Nifty is just going to do that well riding on top of the IT index. So I do the same thing.
In fact, today's session has seen a lot of put riding around the 10,600 strike and also the 10,500 strike. Richard, let me come to you and take your view. Are you taking any sort of position around the current levels on Nifty or on Bank Nifty?
Good afternoon, Navneet. Navneet, yes, we have seen that although we are in this entire series, the index has rallied from 10,100 to 10,600. Now, in terms of technical analysis, if we see the recent past, then during month of February, the indexes had attempted twice to cross the high of 10,640, but it was not able to cross the 10,640 high. So we are quite close to that resistance area of 10,640. So even if 10,640 is crossed, 10,700, 710 has got the resistance in terms of 61.8% retracement of the entire corrective move, as well as if you see in terms of open interest, as you just mentioned, that 10,500 to 10,700. These are the two, the 10,500 put and 10,700 call as maximum OS. So it is indicating that for next 2-3 trading sessions, we are likely to trade in a very narrow range as far as Nifty is concerned. 10,500 is likely to act as a very strong support. But on the higher side, resistances would be found around 10,640, and only if 10,640 is crossed, we would see the index making an attempt to go towards 10,700, 710 levels. So we are recommending our clients to stay light on the index. In fact, the entire long positions which we had created during start of the series, we are advising to start booking profits on the index at current levels. And some of the pockets in stock specific or in sectors which have been showing outperformance, I think for next 2-3 trading sessions till expiry, it is wise to trade on a stock specific approach.
Okay, so keep a stock specific approach is the call coming in from Ruchit. Then tell us which are the top trading ideas that you have for us today.
Aurobindo Pharma is one of the stock that we have been that we are recommending to go long on. If you see in today's session, the stock has given a breakout from a falling trendline resistance. Also, after the significant move in IT, we have seen that in today's session, the pharma pack is also attracting good volumes. So you may see some outperformance in pharma sector during this week. So one can go long on Auro Pharma with stop loss below 610, expecting target around 690 in very short term. And my second pick is a buy call in Z Entertainment. I think even last week we had recommended this call, and even at today, even at current levels, we are positive on this stock from a short-term perspective. The risk-reward ratio now is very much favorable. The base for the stock, the support has shifted now higher to 585. So keep a stop below 585 and go long in Z for target around 625.
Okay, Hemen, what about you? Your stock ideas for the day?
I think Neeraj, I like Lupin. Lupin, the entire pharma pack. I was bullish on IT, still bullish on IT. I say pharma is the next IT from a 2-year point of view. So, like Lupin, it's gone up a bit, but I'd wait for a small cool off. It's gone up in the last half an hour. Around buy at around 805, stop loss 785, target 845. It's a short-term turnaround, medium-term, and possibly Neeraj, even a longer-term turnaround. The other stock which I like is Siemens, deeply oversold, downside appears limited. There is positive divergence, so buy in Siemens at around 1080, stop loss 1060, target of 1120.
Okay. So those are some stocks to watch out for. By the way, just want to mark that TCS has cooled off a little bit from the highs of the day. Just bring that stock up, and it's now up just about 1%. Now the rally in the Nifty name has a distinctive non-TCS IT flavor too. The likes of Infosys, etc., seem to have done rather well for themselves. So do watch out for those names as well. And that aside, amongst the gainers right now, sitting on top, I think, is IndusInd Bank, if I'm not wrong, and it's HCL Tech. So these two, and Mahindra with that 3% uptick, seems to be doing rather well. Sanjiv Bhasin, Executive Vice President for Markets at IIFL, joining us on the show. Sanjiv, good having you. Good afternoon. Many thanks for joining in on Bloomberg Quint. Sanjiv, this move we were just analyzing post, I think, September, when the IT index or Nifty IT was at about 11,000 or slightly sub 11,000 to the current levels of 14,500 odd thousand that must be trading at. It's been a big runaway move. Does the commentary from the managements give you the confidence that there could be some more in store? Today, for example, the market has rewarded Sasken beautifully, despite the fact that the revenue growth numbers weren't the strongest.
Yeah, hi. So Neeraj, it's a milestone, not in the way that the IT stocks are moving, but it's a milestone that for the first time we've got $100 billion company, and that is a true milestone, and that was much needed. So I think TCS has just set the cat amongst the pigeon that we need more of that flavor, and that is definitely coming from some of the IT stocks, some of the energy plays, or maybe an HDFC Bank. Now some of them will look stretched, but that's the way the cookie crumbles. I think IT globally has been a huge outperformer, and locally I think now you've seen the color from TCS, where their digital moves, artificial intelligence, all that is gathering traction. So hats off firstly to the transformation of the company. Numbers were very pleasing on the upside, and I think now it will be expensively priced in the next 6 months because there is under ownership, and it will become a bellwether on the index which will you know, chart out the course, given that the rupee is also on a weakening note.
Okay, Sanjiv, so one is, of course, and you know, somehow, I mean, I looked at this study not on the downside but on the upside. Rupee appreciation has not always spelled bad news for Nifty IT. Having said that, I mean, one is that the behemoth, which is TCS or some of the others, $100 billion of market cap, yes, but still very nimble, still promising a 10% growth. And there are mid-cap companies who are not doing that. The second part is, of course, the kind of gains that the mid-cap IT companies have shown and their commentary about how their verticals are looking so solid. What would you choose? I mean, you know, for somebody who doesn't have the flexibility or a leeway or a luxury of betting on 3 or 4 IT names, what is it that you personally think an investor should do? Bet on a large cap IT name, and if so, which one? Or go for one of the mid cap IT names based on the commentary that you've seen, and if so, which one?
So Neeraj, if you recall, we've had 3-4 stocks under our coverage. TCS was one of them in the large cap. Our top pick was, of course, HCL Technology. Now, from those 850 levels, that has also been a steady performer. We think HCL will outperform on the numbers front, given that their BFSI will perform very well. And in the mid cap, now we've had 2 picks which have almost doubled. You know, it is Mindtree and Tata Elxsi. And I see no letting up. You know, their own verticals, they are doing very, very well. So you can add an NIT Technology or you know, some of the mid caps which you name. So for an investor, the IT dominated funds, you know, in the mutual funds, look for those. Look for where there is a nice mix of both mid and large and small caps, because mutual funds will outdo all other classes, because you may bet on the wrong horse. So I think this is the ideal time to be in a mutual fund and rather a SIP, you know, because for the first time IT is now is leading the index higher, and we have a fairly good mix of them, you know, HCL Tech, Infosys, TCS. So like I said, either you go for a balanced fund which has IT as a theme, or you choose you know, some of the large caps which we mentioned. But I think IT is going to be an equal weight or an outperformer on the IT index on the Nifty, at least in the next 6 months.
Okay, so far definitely IT has been an outperformer, and an IT Tech which Sanjiv was talking about, that counter has been doing pretty well, both Tata Elxsi and NIT, and because of that you also saw NIT Limited moving up, and the reason for that is NIT Limited has almost 23 to 24% stake in NIT Tech. Just want to pull up PVR. I think that's the counter which has just gone up in trade. PVR is also in the futures and options market. It was actually trading in the positive territory. It's just at day's high currently, sitting with gains of 4%. Hemen, on the charts at these levels, would you take any trade on PVR, considering the media stocks have also been active in the recent past?
Oh, frankly speaking, yes, Navneet, makes a lot of sense. The only drawback, warning, caveat, emptor, as we say, is the derivatives expiry. Normally charts go haywire 4 days before the expiry, but if I were not to keep that in mind, 9 trading sessions sideways movement Navneet, and we've given a breakout. It's moved up a bit sharply, but yeah, I think it looks good. Above the 55-day moving average, indicator support. Cash market volume in NSE highest in the last 7 trading sessions. We'll have to wait for the delivery marking. Has posted a fresh 6-week high. Looks good on all parameters from a near-term point of view.
Okay, so technically on the charts, as Hemen suggested, PVR is looking good on the charts. Sanjiv, you do have some short-term trades on something like Aurobindo Pharma and also on ICICI Bank, if you could take us through them.
Yeah, so in the derivative space, we are bullish on Aurobindo Pharma. We have a buy around that 625.26. We think you could get targets closer to 650 to 655, even 660 on the upper stretch. This is, you know, like your previous commentator, I think along with IT now, some of the pharma names can actually maybe surprise on the upside on the numbers front. And if those numbers come correct, then I think pharma should also be seeing some very good traction on the upside. So it will be Aurobindo, Lupin and Sun. And on the other hand, I think ICICI Bank is on the verge of a breakdown. We see a 5% fall there. So on a derivative call, we would be short there. Our 2 top ideas over here on a delivery front are consistently ITC, which we think is going to be an outperformer. Notwithstanding the cigarettes business, you have the Wills Lifestyle on the apparel front, you have ITC Hotels, you have the ITC Bhadrachalam, you have ITC Haryali, and I mean I can go on, and all of those business verticals are now contributing very, very handsomely to the business. I think 320 by the next 6 to 9 months is definitely on. The other would be NBCC, again one of our preferred picks, which will be it's corollary to the expansion Government of India's contract on construction in tier 1, tier 2, tier 3 cities, and the order book is the strongest they've seen in the since inception, and no let up there. So execution is the only caveat, which on a quarter or 2 quarter can be little having mixed revenues, but this is a stock which can give you 35% upside in the next 6 to 9 months.
Okay. So Sanjiv, would NBCC be your way of playing this infra pack, or would you use some other road construction companies as well to do so?
Yeah, so good point. So see, firstly, NBCC is the perfect play on India. You don't have any headwinds on global cues, nothing to do with oil, bond yields. It's a pure and simple, it's a debt-free company, and the order book on the Government of India side is excellent. The company is innovative enough that it first sells 25% on a PPP and then uses those funds. It doesn't ask the government for even a rupee. 11% is the flat margins from 8 to 11, and it's a consistent road roller for the next 5 years. Along with that, L&T would definitely be an expensive stock, but it has to be bought. I think L&T is definitely headed for a 30% upside, and you can add an IRB or a Dilip Buildcon or a Sadbhav. All these 3-4 names are very, very strong, and Neeraj, I think the next 6 months will belong to this space because it is India centric and we see no hurdles in the short term over there.
Sanjiv, I don't know if you track the stories here, I'm giving you 2 or 3 options because some of these are slightly offbeat names. For the last week, I've been asking everybody about what's the reason for the sudden surge in Midhani, if you have any opinion there. 2, if you have any opinion on what could be the plausible reasons why, despite not getting the best of subscriptions in the IPO, Lemon Tree did what it did the whole of last week. And if you don't have an opinion on both of these, I have a question from the auto ancillary pack, Jamna Auto. The stock has been clocking in new highs almost every single day, again up today and clocking in new highs. What's happening here?
Yeah, so I'll give you a commentary on all 3. Midhani was a no-brainer when it got listed at a very subdued maybe premium, and I think that I gave my views on TV that time that this will be an outperformer, given that it's a direct monopoly on the type of structure which it has as a product, and where the end use is, it's all in defense, aviation, all the sectors which are on the trough of a very big breakout. So of course the stock has almost doubled and I cannot justify now, but I still think 200 would be a fair valuation. On Lemon Tree, I think people are too cognizant of the slight amount of debt. They are not realizing that owned properties which the management has guided are extremely strong, and they are talking of 4,500 rooms coming on stream in the next 1 year. So I think Lemon Tree again becomes a slight bit of a very, very active stock to be in, just on the heels of an Indian hotel where Vivanta on the medium range has seen huge amount of footfalls, and that volume growth for Vivanta on the Indian hotel side has been the icing on the cake. So as a disclosure, we have coverage on Indian hotel. We think a target of 200 is on the cards, and Lemon Tree was a very good opportunity. The stock is already moved to 85, 87. We would say anything on a decline where if you get, this is a very good proxy to play on the budget size hotels where we think the managements are very proven, they have a track record and they can outdo themselves. On your third stock, Jamna Auto, as a disclosure, I have had this in my holding, Neeraj, for almost 22 years as a disclosure from 7 rupees. And it was a no-brainer given the accent on the tie-up with Maruti and how you visualize, auto sector to be booming in the next 20 years. This has been a great wealth creator, but I think, right now in the OEM space, this along with Rico Auto and Suprajit Engineering would be 3 very good plays to play on the upside.
Wow. Sanjiv, 7 rupees pre or post split?
No, 10 rupees, 7 rupees, when it was just 10 rupees paid up. I'm talking of 20 years.
Wow, that's some wealth creation. So, Sanjiv, give us an idea now. Let's try and take some risk out here. I'm asking you to stick your neck out. Tell us about a concept stock, something that is not necessarily highly priced, not something that is well discovered. For somebody who's willing to take that little bit of a risk, that say 50,000, 1 lakh rupees in your portfolio, or 2 lakh rupees in the portfolio, or 5 lakh rupees in the portfolio, depending on the size, doesn't mind putting that money out as a risk capital. It's okay if the value goes down to zero also, but if the story turns out to be right, as it turned out probably on hindsight in the case with Jamna Auto, if the story turns out to be right, then the stock can actually give multiple time returns. Anything out there in that variety that you're looking at?
So that would be difficult to justify right now, but I would say, you know, a very good stock which we have invested as a disclosure, we have advised all our clients is IDFC. We think this is a perfect mix of a company which is the holding company of bank, where IDFC Bank now becomes IDFC First. Mr. Vaidyanathan is a proven leader. I think in the MSME, in the retail loan and on the CASA side, they would start to outperform. They would be the biggest beneficiaries of all the embroglio which you know, some of the private lenders and the PSU banks have been through, and IDFC becomes a very prudent name. There is a mutual fund business which can be disposed of for at least a valuation of 5,000 crore, and the other verticals which they have. I think this stock's fair value should be closer to 70 rupees in the next 1 year. I would, you know, strongly recommend that buy both these. You know, you can buy IDFC itself or the IDFC Bank and all. I think the risk reward is extremely favorable for a 50% upside in the next 1 year.
Okay, so that's a long-term call coming in from Sanjiv on IDFC Bank. Just want to pull up ABB. That's the stock which has gone up nearly 5% in trade. I think the stock was active on Friday as well, currently trading around the mark of 1,340. Sanjiv, anything from the capital goods pack that attracts you?
Yeah, so you mentioned ABB, you know, both the combine of ABB, Siemens have borne a lot of pain, but I think given that the debt on these balance sheets is low, the parent group wants to infuse more capital, and the, you know, that entire space of where they are very, very predominant, that seems to be revving up. So whether it's power, it is capital stocks on the equipment side, I think both these companies deserve to be in your portfolio. They are also, you know, like I said, their return on equity is much better than some of the other leveraged names, and I think that you could be actually maybe hearing something from the management wanting to shore up their interest in both these stocks. So a very good risk reward and very good proxy play on anything to do with capital equipment in the next 6 months, where we think the private capex should be starting to show a lot of traction on the upside.
All right, Sanjiv, we'll let you go on that note. Appreciate you joining us today and taking us through your top calls in the market. Let's move on to the chart of the day now, and TCS, which touched a new milestone today as the IT giant entered the billion-dollar club in its market cap. Well, this is greater than the market cap of 4 nifty IT players combined. Sumeet Sarkar has pulled up some interesting analysis for us. Sumeet, over to you.
So TCS is now not only India's first IT company to cross the $100 billion market capitalization milestone, but also the market capitalization of TCS is more than the combined market capitalization of the next 4 big IT companies in India. Now TCS market capitalization was able to cross the combined market capitalization of Infosys, HCL Tech, Wipro and Tech Mahindra for the first time back in April 2013. But since then, the company has been able to gain and lose its spot, but recently again the combined market capitalization of the was above the market capitalization of the 4 IT companies on April 11, 2018. Now, TCS market capitalization in rupee term is close to around 6,70,000 crore rupees, while that of the next 4 IT companies, that is Infosys, HCL Tech, Wipro and Tech Mahindra, is close to 6,20,000 crore rupees.
Okay, Sumeet, thanks a lot for bringing that chart of the day for us. Pretty interesting how TCS has actually surpassed the market cap of combined market cap of the 4 IT companies which Sumeet just highlighted. Want to pull up Tirunelveli Chemicals. It surged almost 10% in trade, and I guess the move has just come in the last half an hour, or let's say 10 to 15 minutes of trade. Ruchit, on the charts, Tirunelveli Chemicals 10% move. How is it looking?
The charts are looking quite positive because it's not only moved higher in today's session. If we see the volumes, and the volumes are also significantly higher than what is usually seen on a daily basis. Now the stock is very close to its all-time high, and the previous highs I think was around 2440. So in case if we see a closing above this level, then I think the stock would head higher towards towards its reciprocal retracement targets, which are placed around 2580, 2600 kind of levels. So I think if anyone is holding a long position, they should continue to ride the trend. We could see levels around 2580 to 2600 in short term.
Okay, that's the view coming in on Tirunelveli Chemicals. A very, very sharp move, as Richard highlighted. It's gone up on also good amount of volumes in today's session. Well, before we slip into a short break here, let's take a look at all the key highlights of the day from TCS to REC. Hear out all the key voices on Bloomberg Quint Live on our special highlights package.
I have always maintained that the digital transformation is going to lead to a significant number of opportunities for the IT sector and for TCS in particular. We have been making the necessary investments and been waiting for this moment. I feel pretty bullish about the days ahead. We are extremely well placed because each one of these disruptions, whether you call it as artificial intelligence, robotics, or machine learning, or analytics, all of these are going to be making fundamental changes to our clients' businesses, and this will only mean a significant opportunity for TCS.
If you compare it with the overall market, I still think it is attractively valued. Secondly, I think the fourth quarter numbers were very attractive. Right. 3.9% growth was much higher than on a QoQ basis, was much higher than was expected. And I think across all spaces they have shown a growth, especially digital, as was already touched upon. I think that digital contributes now almost 24% of their revenues. Yes. And with a strong growth in digital and with a good strategy for growth in that segment, US market picking up, the rupee dollar moving in favor of the overall IT segment, I think it's a space to continue holding.
We have a target price of about 215 on the stock. The reason why we are liking this stock is that there has been a continuous improvement in the performance, and largely driven by user industries, which is the auto. So we like the entire auto pack. Auto pack has done quite well, and I think the same is sort of getting reflected in the company's number, because this company has got about 70% market share in the needle bearing space. And in this particular quarter also, we expect a good top line growth of about 14% and bottom line growth of about 36%. So good growth in top line plus expansion in margins. I think this stock has done well, and we expect that this stock will keep going well. Is trading at about reasonable valuations of about 16 times. So, which is why we like this stock. It's a good quasi play on the entire auto space, and I think this stock will keep doing well.
The last 2 quarters, wherever we have interacted with managements, we have found that the confidence levels have been steadily increasing, and business performance has also been in line with their confidence. So that gives us hope that FY19, at least for these set of companies, would be much better than financial year 18. It would largely depend on how the banking sector and the telecom sector, some of these sectors which are really dragging the earnings, behave in financial year 19. We don't have much confidence on that particular segment of the market. Barring that, I think overall the earnings growth should still be in double digits, but may not really touch those 22-23% is what we think at this point of time.
The whole thing is hinged around the fact that investors, and I guess in general everybody believes that e-commerce is the way forward. Walmart needs to bulk up the e-commerce business, and India, is the last great prize which is out there. I mean, China is taken, the US is largely taken by Amazon despite Walmart's attempts. So I think this is the last big opportunity, and frankly, putting down $10 billion for this is, as I said before, is not such a big deal. I think it makes a lot of sense from Walmart's perspective.